Hello, today is Tuesday, the 10th of January 2012. Let's take a look at the silver market on multiple different time frames from the longest to the shortest. Therefore, we'll start off with the half-year chart, each candle representing 6 months worth of data. We're 10 days into this most current one that is up so far 7.8% for the half year, for the year, as well for the month. Now, what's interesting when you take a look at this chart from at least this perspective is that you see the consolidation sideways movement, and that's really all the last couple of periods within the three have been, as it endured a sideways consolidation for a greater period of time. A few years ago, a range in between roughly 9 and 20. And that was 1, 2, 3, 4, 5, about 8 candles or so. So it broke through this range in 2010, and it is went sideways just a little bit. Now that's why if it were to come back to a previous resistance level around $20 per ounce, that's not going to take the bullishness away, or you can say that that's something you would expect, because oftentimes previous resistance on a breakout will become that of support. And the key word is often. It doesn't mean it necessarily will, but if it's favored to do so, maybe it still will, maybe it still won't. If it doesn't, then we've established support here roughly around 26 per ounce. As it goes higher, this will be a significant level that people will be using for the lowest area of a range when calculating things like Fibonacci. Now, the Fibonacci calculations on this chart is from the low of $1.27. And that low is going back before I was even born anyway. And within that, we have a Fibonacci line here and here. Therefore, really, as long as it stays above 12, you can say that the market is bullish. And you can laugh at that or whatever, but that's how the numbers work out within the calculations. After all, we're still trying to get back above the highs from 1979, 1980. That's one of the big reasons why I like it, because it was manipulated so badly that fire sale prices, in my personal opinion, within the physical metal have been so magnificent and pretty much will continue to stay so as long as the price is under about $75, $80 per ounce, because the expectations that I have are far greater. Let's now move this on to a more shorter term, but still somewhat long-term time frame, and that is the monthly chart. Each one of these candles represents a full month's worth of trading. The Fibonacci levels work within this low of $8.46. These were the fall of 2008 capitulation lows, and the highs from the spring of 2011 at $49.81. It pretty much has found support at the first Fibonacci level, and I say pretty much because no, it never did touch that level, which is 25.31, but on two different occasions it was very close. As the first time it came down there, it hit 26.10. The second time it came down there, it was 26.14. It's still, however, in this downtrend, and until, of course, it gets above this resistance line, it's going to be staying in this downwards consolidation period. And that's, again, another form of market correction. Now let's switch this on and move this to the weekly chart. And the weekly chart can show more of the sideways consolidation. And the big trend line, which is this basically in here, it really has to get above that level for me to state, okay, we're ready to go right now. Because a lot of times people will state that, well, I've heard some people say that silver will go up when you least expect it. And I'd have to, I think the opposite actually, because technical analysis within these levels where they state, and I'll show this on the next chart, which is the 3-day chart. because that will show the more important Fibonacci for the, well, now period, because this uses the Fibonacci from the lows of 2610 and the highs of 4981. It's got to get above this level in here for the market to at least get out of a bearish position. We still have this pattern of these lower highs, so for now it's got to get above 35 just to break a lower high. It's very possible whether we could find some resistance where we encountered some support at roughly around 31, and if that's the case, that would be a higher low. And if we came back down to 26, what that would mean is the odds would be thus increased for that level to be taken out. So overall, what the market needs to do is get above the 61.8% level, hold and stay above there for a decent, significant amount of time. That level is 38.91, and you can even go ahead and just say 40 as a nice even round number, which also gives you a little bit of extra leeway, because if it can hold 40 well, it should hold 39 fairly well. And then when it can do that, then it would be telling us that the selling would become that of a failed move. I'm very confident that the failure within fiat currency is going to come into play, or the failure in which keeping people asleep to the situation and stopping them from executing any type of decisions that would be beneficial for them. I feel that whenever it's ready to happen, this thing is going to explode. And that's why when it does make this move above the 61.8% level, I'll be ready for this thing to continuously move higher. Thus, I think it would be when I expect it, when it goes to that type of level. Let's now move this on to the daily chart now. And the daily chart has the Fibonacci levels from, let me just go back to the last one so I can show you. The Fibonacci that I'm going to be using will be the one from this high, I think, and this low, which is really kind of stupid, because why does this high take more precedence over this one? And the reason why is because I'll just show you a different number. The significant numbers are the ones you see on the screen: 33.41 and 38.91. So here's the, actually it's from the 36.15 high, actually. No, it's from 44.22. There's a high, 44.22. So I think what's more important about this line here, which is 31.92, is that this was a general area of where the market had a long range of a sideways consolidation period on two different levels. Will it make it to a third one? We'll have to wait and see. If you look at the action right now, what we're seeing is that today's daily candle, that's so far up about 3 2/3%, has managed to break away from what was the formerly declining 18 period average of prices, which has then went sideways, and now for the first time in a while it has broken above a sideways consolidation to the upside. The last time it happened was in here, and what occurred was an okay size up candle, decent size, and then a high that has not been seen, of course, since that particular time frame. And within this chart, you can look at this whole pattern in here, and one thing you might be able to realize is that we do have that of an inverted head and shoulders pattern. And I'm going to take a look at this more closely on the quarter day chart, but an inverted head and shoulders pattern, those cup and handles, any of those sort of deals, merely it's an easy way of showing patterns that make sense. And the reason why inverted head and shoulders patterns or head and shoulders patterns can be so effective, other than the fact that other people look at it and thus that becomes a self-fulfilling prophecy in itself, is because it's a way of understanding momentum dynamics. Because if you make a level within the inverted head and shoulders, and you obviously need to break through to make the lower low, which of course occurred in here. So there you make the low, and it's strong enough to be able to get back to the previous high, because that's a significant part of the next part of the inverted head and shoulders pattern, as it's got to have a significant rally that matched the selling part, which is exactly what happened, which is really showing us the potential that the breakdown below 28 can be that of a failed move. So it's a significant move just to go up to this level, but this level can't fail, which means it has to successfully retrace something. And it successfully did retrace something, at least as of now it has, as it only came back down to the previous support and is starting to show momentum. That's oftentimes why this would really work out. Now, as far as Fibonacci analysis is concerned, it's as well showing some potential pattern that it wants to make a run towards this next higher Fibonacci level, which is roughly at 31 2/3 or 31.68. What we need to see is we need to see further momentum or confirmation. The best thing that I like to see, at least for wanting to make a play within that, is for the market to come up to around, well, even where it is now is fine, and then retrace back down to this previous level, which was major resistance, to become major support. Maybe have 3 or 4 candles where the line pierces towards this line, and then as it does that, it's going to develop a period of resistance. So it breaks out, comes back, and then it does something like this. You can see that it would develop some sort of resistance level. After it develops that resistance level and starts to break through, then the odds favor over usually a significantly shorter period of time that it's going to make a run up towards that significant level, where at that point you would be readjusting to the message of the market and seeing how well it holds that significant area. Thank you for tuning in, and have yourself a great day. Bye-bye.